Hello guys, Steven Dexter. So since the market is slowing down, recently I got time to talk about how much potential you can catch in 2020 and what has changed based on the market we're currently seeing compared to the market back in 2018 and 2019. Before I start this video, make sure to click the like button and subscribe. It's going to really help our YouTube channel to grow, and let's get into the video. In 2020, since the market is slowing down now, I want to talk about my performances this month and last month. So let's talk about August. I made close to 221,000. I did took a decent loss on this day. Forgot what ticker I traded, but I traded about 3 times, I think. Took 30K on each trade. That was the biggest loss in this month. And overall, I think I did pretty well. For the last 2 weeks, there's nothing really happened. So didn't really trade that much. Pretty much all the performances come from the first 2 weeks. So in July, overall, I made close up to 452,000. It's much more compared to August. So I did about 221,000 in August, 452,000 in July. And I did post a couple account statements for the last couple months. For May, June, July, and August, in this 4 months, I made up to close to 3 million in profit. And if you don't go check out the account statements, it's in the previous couple of videos. I did multiple monthly recap and also combined with all the hot tickers in that month. So make sure to check it out. So when you want to look at in terms of how much growth you can gain a year, you want to look at the frequency of the pattern and how much risk reward has increased since last year. When I track a certain pattern, I want to track, okay, this is how many times that can happen per year, and this is how much reward I can gain per pattern. Back in 2018 and 2019, pretty much the past 5 years, gap up short and bounce short happens around 70 to 80 times per year. Now, when we are in 2020, bounce short happens over 130 times already. We're not even close to the end of the year yet. So that type of opportunity increased and also increased the amount of volume in the current market, which I'm going to talk about later in this video. Once we track how many times the pattern can happen per year, then we want to look at the risk reward. Typical risk reward on shorting patterns or going long, shorting is around 20 to 25%. Now that's without offering the warrants getting executed in the market. And going long, you can win up to 60% to 100%. Now I have made many trades in 2020 that I made over 100%, sometimes even 300%. So that type of reward increased as well. By looking at this year, in 2020, we have a large amount of opportunities appeared compared to 2019 and 2018. And also the reward increased about 50 to 60% in average. So if you're a beginner, you only want to stick to one pattern, I suggest to track the frequency of the pattern can happen per month, especially because you want to start with a small increment at first. Then you want to go into a long-term goal, let's say a year, 2 years, or 3 years. But at the beginning, how many times happen per month, then you will have that patience to wait for that type of opportunity to come instead of going after a trade to potentially lose money. So after doing the research of how many times can happen per year and how much reward you can get per pattern, you want to go into details of the pattern, because sometimes when the market change, the amount of opportunity growing in the market will also attract more volume into the market. And volume is the major indicator that can increase the pattern winning percentage. So for example, let's look at bounce short, right? The more volume can trade in an individual resistance will cause more back orders. The more people come into the market and trade in that one day, somebody is going to lose money, because 90% of the people doesn't really know how to trade or doesn't really know the market, and they end up losing money because they don't have the knowledge. That also means it will increase your winning percentage on your shorting pattern. In this type of market, when you are shorting into a second green day or a multi-day runner, you don't really know where the limit is before you gather all of the data. So back in March and April, I did took some bigger losses around 90K, 80K, because I don't really know, okay, well, this is the limit of the market and this is how much volume can potentially increase by the end of the day. So let me give you a decent example for you to understand this type of concept. First of all, when you look at the entire intraday, typical volume can trade anywhere between 25 million to 40 million in one intraday. By having all those data collected, you will know, okay, the average potential volume can land around 100 million to 200 million. and at what time the stock will trap enough back orders for the stock to go down. So with amount of volume increase, typical volume can trade in the morning is around 20 to 30 million in 2019. When we're going into 2020, the typical volume can trade in the morning can land anywhere between 60 million to 80 million. And you want to look for that volume first before you enter a stock, because with the market change, the amount of volume will tell you, okay, this is the maximum back orders can get in today before you can short a stock to increase your winning percentage. So studying the volume is very important. This is how to really value how much back orders can trap in the morning by reading the average volume. The second method you can use on the volume is you want to track the maximum volume can get in one day. So in average, we are getting around 100 million to 200 million in a day, but the maximum is around 500 million to 400 million. When the stock gets really overcrowded, I know the volume is unlikely to exceed 400 to 500 million. So when the volume actually reach to that limit, I know the stock is likely to drop. So the maximum volume tracking on your statistic sheets is really helpful, especially when you're looking to short some of the bigger runners. So in conclusions, you have to focus on the frequency of the pattern, the reward of the pattern, and also be able to adapt into current market condition, which I mean by volume. By reading the correct volume, you should help you prevent making much more mistakes and also getting much accurate entry as well. So that'll be the end of this video. Hopefully you learned something and can be applied into your own method. And that will be the end of this video. Thank you very much for watching, and I will see you guys in the next one.